Tesla investors who are bullish on the stock are now, for the most part, expecting a big jump. But the question is, when might this happen? Cathie Wood of ARK Invest said it best in 2019, the longer the base, the bigger the breakout. Since that time, the stock jumped 20x. So what about now, here in 2025, with Robotaxi now live, the human and bot now in version 3, and AI accelerating? For years, analysts have tried to explain Tesla's baffling stock movements, often missing the core truth. 80% of the time, it sucks being a Tesla shareholder. Last year, Tesla stock rallied 244% over 239 days. But look closer, and the rise happened only for 31 of those days. This is why institutions are reluctant to own the stock. But for us retail investors, if you're aware of this, hang on for the long term. We've got Larry Goldberg joining us today. He's a multi-entrepreneur. Thank you so much, Larry.
Thanks. Great to be here, Herbert.
So this is a concept that Søren Basher did a lot of research in. He took a look at, the entire history of the trading days for Tesla. And just like what we're going to cover today, what you look at that, you discover that Tesla, for some reason, because it's an innovation, disruption, innovation kind of company, led by Elon Musk, whatever, it's very volatile. But there's very specific days where most of the jump happens, and the rest, it's either flat, plus or minus 1-2%, or even massive downturns. Having said that, I just want to mention that if you look at a lot of the other stocks, Apple, Google, Nvidia, they also have massive downturns too, but it just feels like Tesla happens to see it most. So Cathie Wood said this, she said in 2019, this is prior to the big jump. She said the longer the base, the bigger the breakout. And then she thinks that the reason why that happens is that when you have last 4 years, when nothing's happening, right? As nothing happens. This is just, let me play this bit here and we'll listen to her, what she said.
Now, let me take your other point. This trading around, this trading range, you as a trader and investor, but as a trader also, understand that when you build a base like that, one of two things is going to happen. It's either going to break down, and that's what a lot of the bears have been betting on, and they've been throwing everything at it, or it's going to break out. Clearly, we believe it's going to break out. And the longer the base, you say 5 years, the longer the base, the bigger the breakout. So we're really looking forward to that.
Yeah, and her reasoning was that if you have a long base, then it gets rid of the people who are, kind of not really that convicted, have conviction on the stock. They get tired. They're out of here. Then eventually it just gets refilled by people who truly believe in the stock. Do you think that that's true?
It is true. I mean, I've seen it again and again. And, there are two sides to the corollary. There are two sides. The one is if it's got this long base, it could go like this or go like this. And the reason is what's happening under this, year-long, 4-year-long base. What's happening is the company is either evolving and developing upwards or it's evolving and dying, one of the two. So when a company crashes, it generally follows a period of this long base. When a company goes through the roof, look at NVIDIA. It's a perfect example. And we've seen it twice now with Tesla. We're in the midst of an uphill climb. And it's interesting as to whether the climb is going to maintain its tempo or sustain for a while at these levels and then go up again. It may even come back down a bit because, it's getting to really heady levels for its current trading condition. Just now, the investment analysts are beginning to look at the future. Up to now, they've been calculating, analyzing it as if it's a car company. Only now have the general body begun to consider the possibilities. So, yeah, I'm a long-term holder and a long-term investor. I'm just not convinced that this year or even halfway through next year, possibly the whole of next year, we're going to see a true breakout. Right. I don't consider where we are now to be a breakout.
Yeah, agreed. Yeah, so this it's been painful for this Tesla shareholder for the last 4 years. And then, like you said, only now are investors starting to, the institutional big whale, at least their words, they're starting to realize it's a future here. Do you agree with this, which is what Dalton said here? He thinks that, in the last 4 years, Tesla's built a strong base. We're now in the early stages of it breaking out again. You just said you don't think that that's the case, except this one will be much larger because it's powered by AI, robotics, and energy. The golden era of Tesla's begun. So some people think the other reasons why kind of this baseline kind of stays longer, the base, it just stays flat for years and then it will break out is because, well, what's happened in the last 4 years? You can compare how many vehicles was being made, how many energy megapack factories are being now available versus 4 years ago. The Optimus robot didn't exist 4 years ago. Robotaxi is now live versus before we were all just hoping that FSD, 8 was going to get better at some point in the future. So those things have improved. Meanwhile, the stock is basically the same as it's always been. Do you agree with that? That this time it's going to be much larger than the last?
It is going to be larger, but it's not going to be sooner. In other words, I think that he's being too premature. I think we've got another at least 6 months to go or 9 months to go and possibly a year and a half to go. And it all depends on how quickly these things roll out. We always assume it's going to be quicker than it ever turns out to be. I don't need to remind you how we met and, the predictions that we made when we met.
Yes.
And you said it was going to happen next year. And I said, no, 2
That's
to
right.
4 years.
Yeah,
and
you turned out that you were right. We were talking about the unboxed model and they presented it. And of course, my reaction is they're not going to present something that it wasn't already in progress. And you said, no, it's going to be over a year. You're right. You're right. I owe that to you. You're correct. Yeah. Yes. That's how we met. You were in the audience. I was on the stage and I gave you the mic. And then we had a debate right there. And you schooled me. And I've learned my lesson. Thank you, Larry.
I don't think you've learned your lesson, but at least you got the first lesson. It takes years to learn a lesson. Take it from somebody who's been learning lessons all their lives. There's some lessons I still haven't learned.
All right. My a quick comment there is that people often say, you're so bullish, Herbert. And I'm like, I'm not the one who says things. I have guests, they say things. Now, when they see me nod, they go.
You always correct your guests.
Yeah, that's my point. Sometimes I don't believe them and sometimes I do. So
yeah.
Okay, so this is the other thing that this Grant Melson posted, CFA. So he said this, it's similar to what CERN did. So let's go through his analysis. 80% of the time, it sucks being a Tesla shareholder. This is why institutions don't own Tesla. A stock that's up 30,000% over the last 15 years, okay? The reason is it's very volatile. Last year, Tesla rallied 244% over 239 days, okay? But only bursts of 5 days, 9 days, 5 days, and 12 trading days made up the entire rally. So you had to chew glass for 135 trading days and make sure you owned it for the 31 rally days. That's how it behaved last year. Coincidentally, over the long term, okay, while Tesla's up 30,000% over 15 years, only a cumulative 2 years of it was rally time. Institutions don't own Tesla because of this. And what happens to them, portfolio managers have to assuage their clients during this time, which is very, very painful to do. So they give up. So this is I have Simon Hale on. He's a portfolio manager, and he tells me this all the time. Every time Elon says something, he'll get a barrage of phone calls from people who are very concerned about their investment in Tesla. He has to tell them, okay, the story hasn't changed. It's all still true. This is going to work out in the future. Right. And so many institutions. Do you agree with that comment?
I have a good friend, Brad Ferguson, who you know very well, who manages concentrated positions such as Tesla positions, and he does that because of his experience with Tesla. So it takes a very special portfolio manager to put a client into Tesla and concentrate his position in Tesla and hold his hand through that period, because it's a very trying experience. We lost a lot of Tesla investors in the last crash because people got so excited with Tesla. They, leveraged up and leveraged up and leveraged up. And I pleaded it every time I appeared, on the stage. I pleaded with people, don't use leverage. And I, again, plead with people, not to leverage their Tesla stock. That's the very last thing you want to do. Tesla stock is very volatile, and because it goes up one day 5%, everybody gets excited and piles into. Accumulate your Tesla stock with what you can afford to accumulate it with, and take time to let it mature. Just don't look at the price from day to day. Don't worry about it. If our thesis is correct, we'll do well. If our thesis is wrong, we'll lose that money. So don't invest what you cannot afford to invest. That's all I can tell people. I can't help any further than that, and because that's all I know. That's all I know. And I'm a Tesla bull. I've invested very heavily in Tesla, a long-term Tesla owner. But by the way, your commentator says that that's why institutions don't own Tesla. To the contrary, many institutions, some of the largest in the country, own a lot of Tesla.
Yeah.
Some of the best institutions, the most highly experienced and performant institutions own Tesla. And I'm talking about Fidelity, and I'm talking about Vanguard, I'm talking about JP Morgan Chase today, I'm talking about Goldman Sachs, I'm talking about some of the largest, and Morgan Stanley, and most performant institutions own it. There are many institutions that take the view that your commentator is talking about, and I understand that problem. And there are some institutions that were very heavily into Tesla stock, ran up to the 400 range, sold the stock, and they're happy to sit back and not own the stock. And of course, anybody who owns the Nasdaq, not the Nasdaq, but the S&P 500, they have to own the stock in proportion to the S&P 500. So all I can say is that be thoughtful about how much you invest in Tesla, and be thoughtful about looking at the price every day and thinking, oh, I'm making money, oh, I'm losing money. You're not. If you're in Tesla for the 5 to 10 year term, you will do very well, in this humble investor's opinion.
Well said. Very well said. Yeah, JP Morgan, you brought them up, and they're one of the larger holders of Tesla stock. But then, as I reported on this, I don't know, a week ago, a month ago, as they were actually buying stock, because we've been showing how big whale investors have been buying Tesla stock in Q4 and this first half of this year. They've been starting to buy it. They've accumulated. So now their percentage of Tesla share ownership has risen and the retail ownership has fallen. As they were buying stock, they actually put out notes saying that you should short Tesla.
Completely different departments. I mean, people.
Yeah.
So, the analysts are supposed to have a Chinese wall between them and the buyers of the stock. And so those analysts, really, they're expressing their own opinion. They're not expressing the opinion of the institution.
Yeah.
And so, look at Morgan Stanley. Morgan Stanley for years, and talked down Tesla stock, while Morgan Stanley was one of the biggest institutional holders of the Tesla stock. Today, that's flipped. Morgan Stanley's become very bullish about Tesla, or the analysts have become very bullish about Tesla. So, don't look at the analyst's opinion and the institution's activity in terms of buying shares. That's all I'm saying.
Yeah, that's exactly correct. So, this is his final comment here. Great for the long term, but unbearable for investors who manage quarter to quarter or day to day. Don't be like them. Thanks for doing hard things, Tesla.
There you go. Yeah.
So, go ahead.
Yeah, that's the value of, friends like Brad Ferguson, who's able to manage people's money and hold their hands, as opposed to people who, get very excited with Tesla stock, take their clients into it, then all of a sudden, because of this or that, they sell out. So, and we know who I'm talking about.
Yeah. Do you have a comment about, so again, we're not giving investment advice. We're just talking about, your thinking about how things work. And if some investors find that useful, then maybe, but it's really, every person has their own different scenario. So you should never listen to somebody telling you what to do. You should look at it yourself. Some people say that, so obviously, I think, like, I'm talking to a bear recently, a good friend of mine, and I said, we're both right. So in his mind, he's more. It's hard to say he's a momentum investor, but basically he said Tesla stock is going to be flat next year. He said this 2 years ago. He was right. I was wrong. And if you had taken that money and not owned Tesla but bought NVIDIA, you would have done really well. So timing is important.
Yeah.
But then at the same time, I said we're both right, because in my mind, my investment style is I don't need to be looking at it for the next several years. But certainly it kind of feels bad, right? Yeah, what if I did sell it 2 years ago, 3 years ago, and then I put in NVIDIA? But it's like these are what ifs. Who knew what was going to happen? But how do you handle that kind of conversation? Somebody says, yeah, you should have sold Tesla, bought NVIDIA, then now buy Tesla now. Who knows, right?
Everybody who timed the market perfectly and bought the right share at the right time and sold it at the right time today is a trillionaire.
Yeah.
And so you count the number of trillionaires there are in the market and you get the success rate of that type of approach.
Mm-hmm.
It can't happen. It can't happen. Listen, if you're right 30% of the time, but your strategy allows for the fact that you're only going to be right 30% of the time, you're going to do extraordinarily well. Extraordinarily well. So the people who've done well out of Tesla today are people who have a third less money than they had for that given number of shares 3 years ago. But they have 6 times as much money as the guy who started investing with them at the outset of the 6 or 10 times more money at the outset of their journey. So what do you want? Do you want a third less money of what you had 3 years ago, or 10 times as much, and 10 times as much money as the guy who, quote, timed his market? Or, do you want to be that guy and be rich one day and poor the other? Because once you're poor, it's really hard to get rich again. Once you're rich, it's extremely easy to get poor again. So timing the market is a really
Hard thing, if not even impossible.
Strategy.
Yeah.
And it's a bad strategy because it has been proven historically again and again to be really, really, really bad.
Yeah. So I think you and I are both long-term investors. Many of the viewers here are. And what we do is we look at companies that we believe in, that are innovative, disruptive innovation, that building tech that could be disruptive, that if it succeeds, could make a big difference. And then you're betting on the company, the team, executive team, the management team, the company itself, if they can do this. And so what will happen is, it's a disruptive. So nothing will happen. You have a car business increase by 2%, increase by 10%. Oh, now this year's down by 5%. Okay, because it's the car business. But once you innovate, let's say autonomy, robotaxi, it could change the game completely. And then all of a sudden, you'll double your market because people need to buy cars with autonomy versus not, or robotaxi. That's what we're betting on. And so I was going to ask you this, and when is the forcing function for Tesla? So what that is that the stock is flat for the last 4 years. People are getting excited now with these stories of robotaxi and bots, but there's still stories. And now the robotaxi is alive, so people are going, okay, it's real, but still not hitting the earnings. The time that NVIDIA went up and did their massive jump in stock price jumps was, and CERN did a fantastic show on this, and he showed that it was when NVIDIA's earnings, quarter by quarter earnings, continue to rise. They reported quarter earnings, and then the next quarter it was higher, then it was higher and higher. And that's what convinced the world, oh crap, they're actually onto something. Their product is selling like crazy. So that happened, and that's when the stock skyrocketed. It was a forcing function, pulled everybody to raise the price. He says that will happen in Tesla in the second half of 2026. You'll have earnings because of robotaxi. Again, if you might be wrong in terms of timing, but then once that gets moving, it then becomes quarter upon quarter increase. At that point, that becomes an earnings story, not just a story, an earnings thing, not just story, and therefore stock goes up. Do you agree with that?
I do. I'm aligned with CERN. I just think that the timing is very elastic. We could have some kind of disruptive disaster in Tesla at any given time. A court case, a board disagreement, some extraneous event affecting us. We could have some kind of I mean, I hate to say it, but the risk of anything happening to Elon is gigantic. It's very, very serious in these times. And so there's every possibility of things going wrong. But absent those things happening, I'm absolutely aligned with CERN in terms of his timing. I don't see anything really transformative before the second half of next year in terms of the company's actual trading. When the market gets that realization, when they understand the extent of what's happening and the scale of what's happening, they could well move the stock up in advance of that. Right. It didn't happen in NVIDIA. You know, NVIDIA had to prove it before it jumped. Look, I held NVIDIA for 11 years. And I sold it at the peak, you know, in the 21 burst when the bubble was because I couldn't justify it. But I didn't look back at it. You know, just reflects badly on me that I didn't review my thesis. I sold at the top because it was just the market was getting crazy and I didn't know what the bottom would look like when it hit, which was really bad, by the way, for NVIDIA and for many other stocks, including Tesla. I didn't sell my Tesla, but I did liquidate most of my other portfolio, all of which had done incredibly well over a 10-year period. So, you know, there's a case where, you know, I broke my own rules but I haven't yet, you know, I mean, NVIDIA proved me wrong. All the others I've been okay on, but I held through the Tesla thing. So bottom line is, yes, could it happen next year, second half? I believe it will. I believe CERN is right, but there are a myriad of events that could, you know, spark a downturn, that could mean a longer period of time. And there are some events that could bring it forward.
Yeah, I was trying to look up Warren Buffett because when you were talking, it reminded me of what I think he said. He said something like somebody asked him, what is your biggest regret or what is your biggest mistake? And he said that oftentimes I would sell a stock and then if I just held on to it, it would just keep going up. I should have just held on to it kind of thing, right?
Yeah.
And that's the point about long-term hold.
And you know, I'm the guy who held Amazon through terrible downturns. And so I should have known better. But to select which stock to hold on to, I don't know. And I felt like the portfolio needed to clean up. But there you are. Yeah.
So your conviction on Tesla, because again, what we're looking at is signal versus noise. And right now the products look like that they're succeeding. Robotaxi appears to be succeeding. It's working. We believe that FSC 14 is working. You and I are testing it every day, and we know we can see it. Right? You know, does it look like it's going to solve the problem at some point? And it looks like we're well on our way to that.
My only question is timing. You know, how long before Robotaxi releases the safety driver? How quickly will they scale? You know, how soon will they release or start selling Optimus? You know, when does the semi take to the road? You know, these are variables that we have no idea of timing. We know one thing's for sure: whatever Elon tells us, it's going to be later. That we do know. So, and I think CERN's guesstimate or analysis, because he doesn't guess, he does very deep analysis of the second half next year, it fits my sense of it.
Yeah, when the beginning of an earnings report at second half of next year, and then the next one, and then the next one, and that's when people will realize, okay, it's impacting the earnings, and then it's going to keep growing from then on.
It's going to impact revenue before it impacts earnings.
Well, not if it's not if it's Robotaxi related, which is almost all margin.
Particularly if it's Robotaxi related.
Why is that?
Infrastructure, the infrastructure rollout of Robotaxi is significant, and it is their competitive advantage, and it's going to add significantly to the cost of doing business in Tesla in general.
Gotcha. Thank you so much, Larry. Appreciate it. Check him out at his X account, Tesla Larry. Thanks, everybody. Bye. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.